Trading, 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 trading. Now you're probably curious and you really want to know, how does Forex trading really work? Or let me really take this thing serious, because I've seen people who trade Forex buy luxury cars, live the best of life, travel, and then have the best phones and everything really nice. And everyone is talking about it on social media. And it's like, you that you're not doing it, you have nothing serious doing with your life. How does this really work? Do I really have to know calculations? Do I have to be very good in mathematics and all of that? All of this answer, I'm going to be breaking it down in this video. How you can start Forex trading, what Forex trading is, how you can start taking advantage of it and start using your smartphone right now, even in your bedroom, to start cashing out in Forex space. Let's go. The first question that might be in your head, let me answer that, is what exactly do I really need to trade with Jeff? So the things that you need to trade with, most of these things you already have. But let me just list it out and explain why you need them so that you can get really prepared. Number one thing you need is a phone, a smartphone. Some of you already have even two right now, watching me, right? But you just have to learn how to put a very good use to it. Any phone regularly can just work, whether an Android or an iPhone. When I mean an Android, any type of one. Even when you are using an old iPhone or an old Android, it still does work. You only need to download just one app, which is what I'm going to be talking about next. Another thing you're also going to be needing is a laptop. Laptop is really important in this business because you really want to be able to check your analysis far to your left. You want to have a wider screen, and you just want to have a more ease of things. You just want to see things in a broader perspective. Then the third thing is you need a MetaTrader 4, an application that allows you to place trade. This is the application you need to download on your laptop and also on your phone. This is the only application you really essentially need to download on your own smartphone. Another thing you also need again is your trading analysis platform like TradingView. Almost everybody uses TradingView, and there is a new one that just got released too, which is Go Charting. So these platforms allow you to see the pair or any currency that you're about to trade. For example, you want to analyze GBP USD, you go on this platform like TradingView or Go Charting, and then you type GBP USD, and then you get to show you the chart in form of candlesticks or anyhow that you want to be represented. Since you already understand the tools that you need for you to participate in this Forex trading, now what exactly is really Forex trading? Forex trading is something that you have done in time past, but you never really know that you're actually participating in it. So if you have traveled from one country to another, you have actually traded Forex. And if you have had any reason for you to change your local currency to another currency, that's Forex trading. So Forex trading is simply the buying and selling of two currencies, or the exchange of Naira to dollar to Canadian dollar, from Canadian dollar to South African rand, from South African rand to GBP, which is Great British pound, from Great British pound to Australian dollar, etc., etc. The process of changing one currency to the other one, that's just what we call foreign exchange. What is traded in this market is simply money. It is exchange of money. You are exchanging one money for another. Now, another thing that might come to your head is, would this Forex trading really stop anytime soon? Is it a career path? Can I choose it as a career path just as people choose engineering, law, doctor, and all of that? Yes, it is a career path. You can actually choose it 100%. So Forex trading would not stop. The only time that it might likely stop is when the whole country start using one currency. Trust me, that is very unlikely to happen. Even if everybody decides to start using the United States dollar like right now, I know some countries, they would never agree or would never succumb to that, because to them, it feels like a threat to them. So that's why there's always need for you to exchange one country's currency to another one. And even if that happens, which I know it will never happen, then you can move to other trading types like gold, silver, palladium. We have stocks like Amazon, Meta, Tesla, many things. And we also do have on cryptos, we have BTC, we have USDT, we have Ripple, we have etc., lots of them. So you can use the same knowledge I'm about to teach you right now in trading to be able to trade all instruments across board. This is already getting exciting, just as it also got me excited the first time I heard about Forex trading. But let me explain to you, those who are really participating in Forex market, so that you know how to trade carefully. All right, so Forex trading have a lot of participants. It is worthy of note that some are participating for profit reasons, while some are participating for non-profit reasons. So we have the major banks like the interbanks, which is like JP Morgan, Chase Bank, and etc. All these other bigger banks. These are the interbanks where the Forex trading actually takes place. We have the normal bank, commercial banks, which is the GT Bank, Wema Bank, FCMB, etc. All those other banks that you have. We have the speculators. We have the individuals like me and you. It's worthy of note that the individual will only just have at least 2% participation. So the market is not saturated as what most people already think is saturated. It's not. Everybody can still be trading because it is industry of over $6 trillion daily. So you still can participate. We also have hedge funds. We also do have central banks. So central banks comprise of the people that actually are participating for control reasons, not for profit reasons. There are times that the country's currency is too high. Central bank is right there to be able to pump in money to bring it down. An example of where our country, which is Nigeria, if it is too low, Nigeria keep pumping in money so that Naira can rise up a bit. So they actually participate in the central banks, not for profit reasons, but for reasons of control and stability of their country's currency. The same is true with the United States, and same is true with GBP, which is Great Britain. They pump in money. If it is too high, they pump in money to bring it down because market always wants to find itself in form of equilibrium. They always want to be flat. So these are the market participants. In order for you to clearly understand how this market participants really work, I want to give an illustration. Think of it this way. We are in a very big sea, like a Mediterranean Sea. And then we have a big yacht. All right. Those big yachts are the interbanks like JP Morgan, Chase Bank, and other banks, major banks that really where the forex trading really work. And not every individual can go to those big yachts, because they are worth billions and trillions of dollars to build. All right. It's only the big organizations, which is just Chase Bank, that own it, and they have restriction as to who comes there. All right. And then we also have smaller yachts that can transport people from the bank of the river straight to the boat. So those are the smaller people who are at the other smaller boat. Let's represent this one as the brokers. So the broker is to take me, the individual, my order straight directly to the major boats. So these brokers only have conditions which they were given by the bigger guys, those interbanks. For you to bring anyone, you have to make sure you give them enough money to be able to buy good volume. You want to see really good amount of volume. So that's why broker, they have what we call leverage. So even with your $100, broker say, okay, no problem. You can deposit $100 with us. We're going to give you a leverage. So leverage is an amount of money that broker lends to you to be able to do business for the time being. Once you are done with your business, whether it's any profit or in loss, they're going to take back their money. Then you get to deal with your profit or your loss. So that's the condition that they were given. So I just want to understand the whole transaction. So the reason why I'm explaining this one now, I'm still going to explain what leverage is, what broker is later in this video. But I just want to understand the picture, because right now in your head is, how exactly do people really make money? Is it robbing Peter to pay Paul? What product are we selling? What services are we offering? So that's why this part is really important. So what happened is the interbanks get to determine what volume goes in every day. And as a matter of fact, they also make sure that it is not being manipulated, that it's very hard, or let me say it's not easy for you to manipulate United States dollar or GBP, any currency. All right. So that's the function of the interbank. Any transaction that gets to the broker, if you buy, your broker is going to take your buy order and exchange it with someone else's sell order. But in case when you buy and there's no one selling at that point, or when you sell, there's no one buying at that point, they take it directly to the liquidity, which is the interbank, and they exchange it. So your buy order, your sell order would always be exchanged for at every time. So that's one thing, a sure thing that you should have. So it's not Peter robbing Paul. Forex trading is an actual service that's actually being carried out. It is you just predicting future price, and if price actually get there, then you get to make money. For example, if GBP USD is 1.2000 and you predict that GBP USD is going to go up, that is, GBP is going to be stronger than dollar, and then that really happened and price moved from 1.200 to 1.400, then that means you have made a lot of money. When you bought at 1.200 and you sold at 1.400, that means you have been able to make that margin depending on the lot size which you put in. So that's how forex trading really works. And that money would be given to you by your broker, all right? Because they exchange your order, because at that time that you bought, someone else also sold. So it is just predicting future price, participating in the current market or in current country's economy, and then whenever the economy does well, you get to make money. You also predict that it's not going to do so well. If it does what you've predicted, you also get to make money. That's how forex trading works. It is legal, it's a legitimate way of making money, and it's also a career path for thousands and millions of people. Now you're welcome to this team. Now, let's start the proper application of what I've been saying so that everything can properly make sense, because I love practical. Let's head straight to the computer screen. What I'm about to show you right now is the charting platform where everything is going to be happening for you, where you are going to be spending most of your time and hour as a Forex trader. And that platform right now is tradingview.com, or you could use Go Charting. But for the purpose of this class, let me just stick to one, which is TradingView. That's the most popular charting platform at the time of making this video. So now when you come on here, just go ahead and type tradingview.com like that. So on TradingView, it's going to take you to this page. So when you get to this page, there's a lot of things going on, right? So what you want to do, you want to click on products, because from some time to time, they always upgrade this website. But right now, you click on products and you click on super charts. Super chart directly will take you to the chart where you get to do your analysis. And this is the only or the major thing that you would always need in this application or in this website, as it may be. You could also download it on your mobile phone. If you don't have a laptop, you can download it on your mobile phone. Just go to your app store or your Play Store and just type TradingView. You're going to see the application right there with that same logo, which is popping up at the top right here, like TV. That's TradingView. Okay, good. So let me break things down that you're currently seeing on the screen that I know that you really are confused. As a matter of fact, let me take you to a clean chart where you'll be able to see different currency pairs and all of that. Now, first, what is base and quote currency, as you would already see? When I was about to change chart, I clicked on this thing, which is GBP USD, all of them GBP USD. Now, base and quote currencies are how a currency or a forex instrument is being arranged by ISO, which is International Standardization Organization. So this is a body that is responsible for fixing this code, and they've already fixed it. It is safe. It is like that forever. So you can't see USD GBP. No, it will always be GBP USD because that's how they fixed it. Like what you can see right now on the screen, the first two letters represent the country's name. So Great Britain, and then the last letter represents the country's currency name. Then P stands for pound. Then the first two letters, United States, and then the D stands for dollar. You now understand? So even NZD, New Zealand, dollar. AUD, Australian dollar. CAD, Canadian dollar. You can just put everything on and on and on. So it usually represents the first letters of the country's real name or the popular code of the country, like ZAR, Z-A-R, that's South African rand. If you know South African law, their representation is always ZA. So that is how it just basically works. Even NGN, Nigerian Naira. So that's how all these are set. The first currency is the base currency, which is GBP, and the second one is the quote currency. Let me just put a slash to be able to demarcate it. Oh no, not here. So I'm just going to put a slash here so that you guys will know what I'm talking about. So it can be any currency at all. So the first one, this is the base and quote currency. Let me just do one more example. So we also have Euro USD. So Euro in this case, which is used by Eurozone, EU, Eurozone, and then USD, United States dollar. So this is the base currency, and then this is the quote currency. And the base and quote currencies, we have major currencies and minor currencies. Major currencies are currencies that crosses with the USD. For example, let me list them out on the screen right now for you guys. So we have major currencies, we have quotes, minor currencies. So the major currency right now is we have GBP USD. Let me use caps letter. We have GBP USD. We have there are about 7. You have Euro USD. We have USD JPY. That's USD Japanese yen. We have AUD USD. We have NZD USD. We have, which other thing am I missing? USD CHF. USD CHF, that's 1, 2, 3, 4, 5, 6. It's remaining one more. And then we have USD CAD. So these are the currencies these are the major currencies that you would ever find. You notice that all of them, what they have in common is they have USD as either a base currency or a quote currency. Here, USD was right here. USD is the quote currency, it's the quote currency. Here it is the base currency, it is the quote currency, it is the quote here, it is the base currency, it's the base currency. Here I forgot to put a D. So This is how it all just basically works. And in minor currencies, we have currencies that are crossing each other. Like we have Euro GBP, where Euro will get to cross GBP, all of them. So if we have to start now, we're going to be having Euro GBP. So we're going to be having a Euro GBP. We're going to be having Euro, apart from the Euro USD, Euro CAD, Euro NZD, Euro AUD, yeah, etc. Just try to mix all that ones together. And then we also do have for GBP, we have GBP AUD, we have GBP CAD, GBP NZD. There's one more, GBP CHF, and GBP JPY. All right, so these are GBP crosses. We also do have NZD crosses, CAD crosses, CHF crosses, AUD crosses, etc., etc. But you just understand the concept of how it works. But this is how they are all fixed. You can't see AUD GBP. No, it is fixed by ISO, International Standardization Organization, just as I've told you. All right, so these are crosses that you should know right now. And I'll tell you the one to trade. The best one to trade are major currency because they are what? Less volatile. They are less manipulated. What I mean by less manipulated is the more a country's currency is highly traded, the less manipulation you would see, or because many people are currently trading it, it will be less volatile. But if it is slowly traded, then the volatility will be very, very high. That means you can lose a lot more money at each particular time, and you could also make. Always know in trading, anytime you say you're going to make more money, also know that you could also lose a lot more money. If I reverse it, you also lose a lot more money. But if it goes in your favor, you're also going to make a lot more money. It's always two sides of the coin. So that is the base and close currency. This is getting really interesting, and I'm sure that you're already getting your paper and pen up, and you really want to learn a lot more. And I'm also excited as long as you're willing and you're enjoying this course. Please kindly smash the subscribe button and let's go. Forex Market high is the next thing. The next question you want to ask is, Jeff, I currently have a day job. How many times does this market open, or how do I even schedule my time? Don't worry, after this one, you will know how to best schedule your time. Forex Market is always open 24 hours in a day and 5 days in a week. The reason being that Forex Market will always be open as long as the banks in any of these 4 countries I'm about to list to you is actively working. And these countries are Great Britain, United States of America, Sydney, and Tokyo, which is Japan and Australia. So these sessions, that's not the sessions that they are called. These sessions are officially called London session, New York session, Tokyo session, and Sydney session. This is the official name that these sessions are called. Now, if you head on Google, just go and search and Forex Market has. These are the things you're going to see. Let me use this one to explain, because this best explained on every time frame that you are in. So this first time at the top represents the GMT time, and then the second line represents the instant time. So instant time is being used for those who are in New York, and GMT is used by those who are in London. All right. So first, when the market opens on Sunday evening, it starts with Sydney. Sydney is always the first because the time is usually ahead of almost everybody. So they get to celebrate the New Year before everyone does. So Sydney opens, as at the time that Sydney opens to GMT, that's 10 p.m., that's 22 o'clock. And to instant time, that's 5 p.m. All right. And then once it opens 3 hours in, Tokyo then joins 3 hours in with Sydney. So Tokyo is represented on this red line. And then it closed at 6 a.m. on GMT, which is 1 a.m. on New York time. So once it closes, markets still keep rolling because Tokyo session is still active session. All right, so 2 hours in again, then London gets to open. It's just like taking shift, work shift. So you replacing someone else at work. So that's just what happens. So that's why it's called 24/5. So obviously weekends like Saturdays, Sundays, banks will be closing all of these sessions, all of the 4 sessions put together. So that's why Forex Market is not active in all those 2 days. But once it starts at Sunday in the evening, for those in Eastern, which is 5 p.m., and for those in London, which is going to be 10 p.m., then market starts rolling in again. Now, what's the best time to trade? The best time to trade usually when there's volatility, when there's a lot of people actually actively trading the forex market. And that time happens to be from London Open, which is 8 a.m. GMT, to about 5 p.m. So that way you get to trade your overlap session. Anywhere the two sessions get to meet, like this point, is what we call overlap session. So the best point to trade actually is between 8 a.m. London up until say 5 p.m. London time, which will be in Eastern. That will be 3 a.m. Eastern up until 12 noon Eastern time. So these are the best hours to trade. That does not mean you can't trade in other ways, but that's best liquid time. Whenever you place trade, you get to hit take profits, you get to hit stop loss. Like your faith just get to be determined fast enough. That's what we mean by this one. Now, while you are enjoying this class, let me just quickly chip in pips and pipettes. Pip, just as human being, we get to calculate our movement in terms of steps. Market movement is calculated in the form of pip. So pip is always found in the fourth number after the decimal point in most of the currency pairs. But the exceptions of the pairs would be any pair that crosses with JPY. Remember, we talked about different pairs and crosses. JPY crosses, it is different. And let's head straight to the screen. So the pip is simply on this screen right now that you can see on Euro USD. Let's say the first price was 1.11500. So the pip position is sitting on this fourth one after decimal. After this decimal, 1, 2, 3, 4. So this 0 right now is the pip, right? And then we also have the next. Let's say this is the ask price and this is the bid price, 1.11510. So the difference here will now be 1 pip. That is, if you had actually bought at this point, you bought at 1.11500 and price now moved to 1.11510. That is, you've made 1 pip. Price has moved in 1 pip difference. So in that case, it is 1 pip. Then pipette is like second, is the one at this, is the fifth number after the decimal, is the second. So you can say 10 pipettes gives 1 pip. So this has to move 10 times and it gives you 1 pip. The same is true with this one, all right? So that's just the pipette. Just like 60 seconds make 1 minute. So the seconds right now is the pipette and the minutes right now is the pip, just with the analog clock pattern. One thing you also have to know about pip is what everybody that enter trade at the same time get to make. For example, me and you can get into a trade at the same time. We have the same execution speed. We are quoted at the same price. Then if I make 10 pip, you're also going to make 10 pip. If I lose 10 pip, you're also going to lose 10 pip. But there's something that can actually determine whether or not I'm making this much, or you're also losing this much, or you're making this much. And that is what we call lot size. Lot size determines our buying capacity, determines the contractual sizes and what have you. Just go on Google right now and we'll just type on lot size. Let's do lot size. So think of it this way. Let's say I and the richest man in my country, which happens to be Dangote at the time of making this video, we are into the same business, for example. So let's say I was able to buy iPhone, I was able to buy just 10 pieces for me to be able to resell. And then when I was able to buy this iPhone was worth $100. And then Dangote was able to buy in millions. So I was able to buy 1 million copies of this same iPhone. But I was only able to buy 10. And then this iPhone immediately shifted from $100 to $110. Then I'll be making money in terms of I'll be making $10 per one times 10. But Dangote is going to be making in terms of millions. So, however, we are able to see the future of this iPhone, that this iPhone was going to go from $100 to $110, but then we're not able to make the same amount of money. Why? Because he had more buying power. He had more money to buy more copies than I do. All right? So that's what we call lot size. So there are different people that would be using 1.0, 0.1, 0.01, depending on their buying capacity. So if you use 0.01, on any pip movement, you'll be making 10 cents. If you use 0.1, on each pip movement, you're going to be making $1. If you use one standard, which is 1.0, on any pip movement, you're going to be making $10. If you use 10.0, on any pip movement, you're going to be making $100 per each pip movement. All right? So just as I said, making, if you also withdraw against, you're also going to be losing that equivalent. All right? So now let me show you on the screen. So just search on lot size on a screen. So let me just use this one as an example, right? So on this lot size, you see this is what we call standard lot size. So the units at which you need to be able to purchase this standard lot size, you need 100,000 units of the base currency. For example, if you are trading GBP USD, if you click 1.0 lot size, you want to buy 1.0 lot size, your broker needs you to be able to provide 100,000 of GBP, which is the base currency, to be able to purchase, to be able to participate on GBP. Now, how are you going to be able to get that lot of money to be able to buy GBP USD? Don't worry, the next one is going to clear it out. Then the volume, all you need to specify on your MT4 or MT5, you just need to click on 1.0. So 1.0 specifies that you're using one standard lot size. And then what you get to make on each pip movement, or you get to lose on each pip movement, is $10. So we have mini lot size, which is 10,000 units you need. And then 0.10 is what you're going to specify on your MT4 or MT5. And then on each pip movement, you get to make $1. Micro lot size is 1,000 units, and you get to place 0.01, and you get to make 10 cents only. And we have nano lot size. Nano lot size only work on like derivatives on MT5. It's not available on MT4 in case you're trying to look for nano lot size. The minimum you can ever get on MT4 is 0.01. So nano lot size is still there just for education, but it's not really applicable right for you that will be trading forex trading. So this is the lot sizing. So it is worthy of note that this shouldn't scare you away, because there's a system. You don't need to have 100,000 pounds to be able to just make $10 on each peak movement. That's very minute. That's where brokers come in. Now, what is a broker? Broker, remember I said there is a middleman that takes me from the bank of the river to where the trading actually takes place with a small boat. Those are the brokers. So broker is a middleman between me, the individual trader, and the interbank. So brokers do not just serve as a middleman, they also serve as a channel that provides leverage to me as a smaller trader to be able to trade and ball with the bigger guys, the bam bam with the big boys. So that is just a simple explanation that I can just offer to you as a broker. Now, which broker should you choose? I would recommend Extens. That's the broker that I right now use. The link is in the description box. Click on that link and then you follow through with this process on how to sign up with the broker. Let's go. Once you click on the link at the bottom of this video in the description box, and I'm also going to be pinning it on the comment section, this is where you will be landed. Extens. All you just have to do is just to register, just like registering for your normal Facebook account, Instagram account, or your normal bank account. So what is worthy of note here, you have to just have your address. Make sure the address you have on your bank statement is the same address you're going to be giving to them. And also the name that you have in your passport or your driving license, any one of these official cards is what you're also going to be providing for them here. Just create an account. You just want to come on here, put your country. So I'm in Nigeria, so you want to put Nigeria, right? You just put anything, email address, put in your password, and you continue with your account. And then give them your address, you sign in the normal process and all of that. So you should be signed in like this way. So since I already have an account with them, so I'll just be signing in with my usual detail. So this is me just signing in, because you'll be required to do proof of address and proof of identity, which you need. In proof of identity, you only need to provide any of these 4 things I'm about to list, any one of them, just one. Your passport or voter's card or driving license or national identity card. Any one of these 4 just works for proof of identity. And then for proof of address, you need to provide any utility bill or your bank statement. They want to show that you have an actual address and there's money going in and coming out of that address. That's just they want to be able to prove. Here's how it looks like. I just log on my Extens back end, and you see there's a real account and there's a demo account. So you can just click on open a new account. So if you click on opening a new account, you can select standard for starting out, click on continue, or you can click on raw spread based on the criteria that you want. So if you want to open a demo account, first I would advise you open a demo account since you're just starting out, just so you can just use for practice. So demo account is not a real money, but then they give you virtual account, which is not real, but then you get to practice. You get to practice in a real market condition. So if you select demo account, select leverage. Leverage is an amount of money that your broker borrows you to be able to do business at that time. And then when you make profit or you lose, then you get to give them back their money, and then you get to walk away with either your profit or your losses. And then the starting balance, you want to refund any amount. Your currency, most people get to use United States dollars, because I also do use that. So I'll advise you to leave it in United States dollar. But if your country's currency is different, maybe you're whether in United Kingdom or you're in Europe, you can select it to be euro or any of your country's currency. You can even select naira here. You can select South African rand. You can select any country, Australian dollar, anything you want. But I love to be dollar because I want to be earning in dollars. And then the nickname, you can just send it to be anything, and you can create your trading password. Please do not forget it's your trading password, because this is the password which you're going to use to log on your smartphone. As a matter of fact, let's do that. So the leverage to select, since I'm going to be selecting an account of $1,000, let's go ahead and do that. $1,000, that's what I want. I want to select a leverage of 1 to 1,000. What it simply means is, since I'm having a $1,000 account, that means I'm going to be having a buying capacity of $1,000 times 1,000. So though I have the $1,000 on this my account, but I can do business worth up to that would be $1 million. Isn't that interesting? That would be nice. So if I select 1 to 100, that means I'll be able to do business worth up to $100,000, I think. Oh yeah, that'll be $100,000. But then I want to increase it to select 1 to 1,000. So the effect of this leverage is that, number one, it can make you to be able to do more businesses, and then you get to make more profits. Also, if you are able to do more businesses, you also expose it to a lot of risk. You could also lose your money faster. So ideally, in America, as an American citizen, you're not allowed to select a leverage of more than 1 to 30. Also, in some part of Europe. So they want to restrict their citizens so that they don't expose themselves to so much risk. It's also a bit to control how much risk their citizens get to take in a year. So it's a good thing, and it's also not so good thing, because some people have a high risk appetite. For those that have high risk capital like me, I don't think it will be a good thing. But for some people that want to keep it conservative, it's also a good thing. So create a password. So I'm just going to create any password here and just call it anything. And okay, so this is the password I just created. Random password, you guys can see. But then I just do create an account. So I already have that there. The next thing is for me to explain how to log it in on my phone, and then we'll go from there. This is how you set up a demo account. So we already have a $1,000 demo account funded, and it's on MT5, and it's on a standard account, and this is our account number. Please, at all costs, make sure you use your account number from the online space, but you can just let your friends see, but then don't allow it to be reviewed online. All right, so that's good. So if you want to get more info about this, click on these 3 dots at this end here, and you can see on account information. So this is the whole information on this account. This is the actual leverage, the maximum leverage. This is the free margin I currently have right now because I've not placed any trade, and this is the unrealized P&L. That's if I had trades currently floating. So this is the server that I'm going to be putting this MT5. But before I go far, let me also show you how to fund real money, because that's what is going to matter to you guys pretty soon. So let's come on the real. So the next thing, I'm going to click on open new account. This time around, I'm going to select anyone. So, but if you select raw spread, you get a deposit minimum of 500 USD. All right. So I'm just going to select anything. Let me just choose standard account again. So you choose standard account, click on continue, and then you select 1,000. I want to leverage 1,000. I want to spawn a $2,000 account, and then you put your password right here. So and you select real. That's just the only thing. Since I already have an account, you see, on my account I already have 2 real accounts, MT5 and on MT4. All I just need to do is to click on deposit. I'm going to go ahead and click on deposit at this point. So there are different means of depositing. I can deposit through online bank transfer. So that is your local bank that you use in your country. For in Nigeria, for those who are in Nigeria, like GT Bank, Zenith Bank, UBA, all the type of bank that you need to use, everything is here. And then you can use cryptocurrency using TRC20 on USDT, and you can use ERC20, anything. You can use your card to deposit. You can pay through Bitcoin, Binance Pay, Kuda, Netla, online bank transfer 2, online bank transfer 3, Perfect Money, Skrill, StickPay, Ether on ERC20, this for Ethereum, and then USDC coin, ERC20, and USDC coin to TRC20. So all of these payment methods, you must find one that is best fit for you. So the one I regularly do use is the TRC20 on USDT. The reason why I use that is because it's very fast, and the network fee is just $1 to be able to do that. So I'm going to be depositing to my MT5, and then I make sure everything is correct. I just click on continue. I'm just going to go ahead and pick my phone, go on my Binance where I'm going to send the money from, and click on withdraw. So I have $2,000 right here. Click on withdraw, and I just click on send via network. All I need to do is to either copy this Tron wallet and put it and send it, and just click on copy address, or just scan this QR barcode. I'm going to scan the barcode instead because we live in a smarter world. So why not? Just going to type on TRC20, and I'm going to put $2,000. So let me make it 2001 because fee is $1. They're going to charge me $1 for doing this transaction. That's not by Xness, but it is your Binance that's going to be charging for the network fee anyway. So I'm going to send $2,000 and do my verification. Boom. Yeah, right there. Successful. So I just did $2,000 into this account. Let's see how many minutes it's going to reflect. That's the money right there. It just reflected on my account. All right, so $2,000 funded. So you can see this one has a real badge, and then on the demo side of things, this shows demo. All right, good. So let's go ahead and log this in on our MT4. This is where this thing really get practical and really get a lot more interesting. So the next thing is I'll pick up my phone again. So the first thing I want to do, I want to download the applications that I definitely need to be able to access this trading terminal. I want to go to my app store. If you're on Android, you go to your Play Store. I just drag down my app store, go on search, and I search MT5, since what we have here is MT5. So I click on MT5 and I download this first application right there. This first one that you see right here, that's the application. Since I already have it downloaded, just click on open. Remember the trading view I told you guys to download earlier on? This is for the trading view one. All right, so I already have 2 of them downloaded on my app. So what we need right now is MetaTrader 5. I'm just going to click on MetaTrader 5. So since you just opening yours should be like on the settings. So what I need to do is I'm just want to click on this space at the top here, and I'll click on this plus sign. So what we just need now is the demo account. I want to log in the demo first, and we'll come on for the live account. All I just need, I just click on the 3 dots, come on the account information, and first I want to look for the server. So this is on MT5 trial 9. So that's all you need. So you want to just put EXNES dash MT5 trial. So you can tap it that way. But yeah, the server is showing real. So you want to just look for the trial 9. We're looking for trial 9. Okay, I don't think, okay, that's real 9. I've seen real 9. Where's trial 9? Trial 9. All right, so that's it. So the next thing is I want to copy this MT5 login right here. This is 15. Now paste it here. This is the iPhone. I just copy from here and I paste. Remember that password that I created while signing up this one was, I think I just did a random password and just did a QWERTY. And that's what I did. So your account just reflected here. This whole account that we have on our laptop is now currently on our smartphone. So you can see I have a $1,000 account right there. All right. So let's go ahead and also go ahead and log in our real account. Exact same process. I already have it logged in, guys. So this is it. I already have it logged in. So $2,000 right there. Exact same thing also happening there. Now let's move to the next topic. Since you guys already seen that I have a live account, I have a demo account. Let me switch to the demo account and just do some experiments and explain everything right here. You can see on the screen, on the phone screen to you. So on the phone, the first button you're going to see at this bottom right here is quotes. Quotes is where you get to see all the instruments that the broker allows you to see first. But you can, however, manage all of these things by pressing this pen tool at the top right corner, this button right there, and then you can get to delete anyone you want by selecting and trashing it to pressing the trash. Select and press the trash too. They all will go away. And how do you get to add? You can get to add by just typing any currency, like by just saying GBP USD based on what you thought, and you press the small add icon at the corner. So I want to add Euro USD. Press this plus icon, that green plus icon at the bottom, at the corner again, and then it's added. So that's what happens on the quote session. And then you can press the history at the top left corner you can press it, and then it brings this simpler view of representing things. And you can also press it again, it brings a more complete, that you get to show more information. So you'd notice, let me remove this one. I want to remove the BTC USD, that's Bitcoin USD, and we only have currency pair, which is Forex. So GBP USD right now, the bid price right now is 1.26943. The ask price is 1.26966. It's fluctuating. So if you have to check the difference between the bid price and the ask price, that is the spread. Spread is the difference between the bid price and the ask price. So that small little gap, that's what the broker gets for any transaction. If you place a trade, that's what brokers get to enjoy. All right, I'm going to explain more about that soon inside this whole video. All right, so let me tap on this one. It brings the advance and all that. So you also bring the L. L means the low that the current candle, the low that GBP have that day, and then H means the highest point GBP has ever gotten to that day. So if you notice that on this day, the lowest GBP has ever gotten to is 1.26103. The highest it has ever gotten to today, today to is 1.26983. So these things are very crucial. Same thing is true with Euro USD, like that. All right. So the next thing, I want to tap on GBP USD and click on chart. If I click on trade, it's going to take me to a place where I get to start trading. All right. I'm going to explain some more things when I click place a trade now. So if I click on chart, it brings me to the next phase here, which is the next after quote. The next one at the bottom, soft keys are chart. Chart is where you get to do your analysis. Obviously, I love to show you guys. You do your analysis on TradingView, like right here, because it's the same thing. You do your analysis because you want to do analysis on a broader way where you have enough tools. You can write on the screen. You can bring many things. You can put trend lines. You can just do a lot of things on TradingView, and it's more fancy and it's very stylish. So that's what I mean. You do your chart here on TradingView. That doesn't mean you cannot do it on MT4. You can do it, but then it's slicker and finer on your laptop and on TradingView. If you have TradingView on phone too, you can also use that. So now you notice that there is two lines right now on your screen. There's a red one at the top, which is priced currently at 1.27000, and there is also a green one, 1.26995. It's fluctuating. So the one that is at the top, too, yeah, that is the one that is representing your bid price. The ask price is the one that is beneath it. Ask price is the green one. All right. What I simply mean is, if you click on a buy right now, you're going to be quoted on the red line at the top, bid price. If you click on a sell, you'll be quoted on the green price. So if you click on a buy, you are quoted on the red one. You will not be in profit until the green one crosses the threshold where you were quoted in. That is when you be quoted in profit. Let's go for example. So the next thing is, I just want to click on trade. Another faster way to click on trade is for me to click on this button at this top right there, this one. Then a drop down comes. If I just want to buy right now, let me make it. This is where you select your lot size. So I can drop my lot size. I could also increase my lot size, like 0.01, right? Remember, 0.01 simply means 1 micro. If I increase it and do 0.1, everything is making sense to you now. That's 1 mini. If I make it to be 1.0, that's 1 standard. And 1 standard simply means for every pip movement, I'll be making or losing $10. And 0.10, which is 1 mini, for every pip movement, I'll be making or losing $1. And 0.01, for every pip movement, I'll be making or losing 10 cents. So let's use this one. So we're just practicing. Now watch. We have buy at the top right there. We have a buy and we have sell, right? Let me click on it again. Click on this thing, and we have buy. I have to enable. If it's your first time, you have to accept these terms and conditions to accept one-click trading, because your hand can just mistakenly sometimes touch it, and you'll be losing money. So that's why they need you to agree to that terms and condition that you agree, you love it. All right. But if you know you're not going to be careful enough, don't toggle it on. So I'll be careful. So that's why I toggle it on. So here I want to buy. All right. If I click on buy right now, you see I'll be quoted on that red line at the top. Let me zoom in. Let me go on 1 minute chart so you can see it clearly. See, the red one is at the top. There's the green one. If I click on buy now, you see where I'm going to be quoted. Immediately I want to click on buy. You see, I'm quoted. There's a blue line at the top already. Immediately I click on buy. What happened? So I won't be in profit. I'll be in red. I won't be in profit until this green one crosses it. So a new candle just came outside. Can you see? This is my current trade I just placed. Current trade. I just placed it just for experiment. I'm not in profit. I'm in loss of $13. cents. See, it's fluctuating. Now I'm not in profit. So when you get to be in profit is when this bottom green line crosses it up to the top side. Hope that makes sense. So the next bottom keys that you see again is the trade. On this trade is where you get to see the current floating trades at this place on this terminal, or if you have a pending order, which I'm going to be explaining pretty soon too. So, and most important part on this trade is this part I'm about to explain. Please kindly pay attention. We have the balance, we have the equity, we have the margin, we have the free margin, we have the margin level percentage. Please pay attention, it's very, very crucial. Balance is the amount of money I had funded. You guys saw when I funded $1,000 on the demo. That balance stayed there until I close the trade. That's when the balance gets to change. Equity is free margin plus margin. So you can just calculate your free margin. Free margin is 993.55. It's fluctuating because we have opening trade, plus margin is going to give you back current or equity. All right. Or equity can also be your current profit or your current loss minus your account balance. It will still give you what you have in your equity. So if you just go ahead and do 0.11 minus $1,000, it's going to give you this figure right now. It's going to give you your equity. All right. Margin is an amount of money that you pull down to be able to perform a transaction, and that happens to be $6.35 for us to be able to do 0.01 on GBP at this price right now. Then free margin is an amount of money that is left for you to place new trade. If I still want to place new trade, the broker can still take from this my free margin to help me to place new trade. So if my free margin is at 0, I'll not be able to place any trade again, though my balance is still there, but I don't have enough money to place trade. Balance is just there for being there sake, because when I close the trade, whatever that is currently in my equity becomes my balance. I hope that makes sense. Margin level percentage, it shouldn't just go below 100, because if you go below 100, that's when you get to have a margin call. Margin call is when the broker gets to close out your orders with the biggest loss first, so that they can protect themselves against potential risks. All right, I hope this makes sense. Now let me show you. This is the practical aspect. I'm going to be explaining what leverage is, what margin is, and all this equity is theoretically as we progress. So if I tap on this trade I'm currently in on now, you notice that there's SL at this bottom, right? This SL simply means that's where I need to put my stop loss. And there's also TP at this bottom too. TP at this end is where I need to put my take profit. Stop loss is an order that you give to your broker that whenever price gets to that certain point, it should close you out in that predetermined loss you have already had set. And take profit is an order that you give to your broker that anytime price gets to that point of profit, that the broker should lock you out in that amount of profit, even though your phone is off, even though you're not on your screen, you're not on your phone. The same also applies to stop loss. So these are the two orders. Now, in order for me to do this, you can place your trade and put it later, or most ideally recommended you put it whilst placing your trade. What I can do now, since I didn't place it, why? Because I just wanted to hurriedly show you guys how it works. I just need to click on modify position. I'm going to take my stop loss and put let me just put a random number. Since I'm buying, on my trading view here, let me just say I bought here. This was my buy point. Let me show you guys. This was my buy point. All right, my buy point, and I want my stop loss to be here for no reason, and I want my take profit to be here just for no reason. I'm not doing analysis yet, but I just want you guys to know how to set all these things. So I'm just going to take my crosshair, take the crosshair. So this was where I bought. All right, this is my entry point. My stop loss should be somewhere around here, right? 1.26. This figure, I'm going to take it to my stop loss. 1.26460. 1.26460. And then I said my take profit should be somewhere around here. I'll go to take profit. 1.28279. 1.28279. And then the next thing I want to do, I just want to click on modify. So you see, if I go back on the chart and I go back on higher time frame, so we can easily see these things, you'll notice that my take profit is actually where I said they should be. Everything is specified. On the daily, you see, take profit is at 1.28279 and my stop loss is at 1.26460. All right, remember there's no criteria at which I used to determine that. I just did it so that you guys can know how exactly it works. So that's what really matters here. If you want to close out this trade right now, I want to close out in loss, I just tap it and I'll click on close position. If I click on buy market, I'll click on this close right now, I'll be closed out with 31 cents, 32 cents loss. If I click on it now, immediately that's a loss. So you see my balance immediately has changed to 999.69 cents. Equity, everything maintains the same thing. Because, and I click on history, history just showed that I funded this account with $1,000 right now at 141, and then I just lost $0.31. So, and on this trade, with history, you can even get to know what the person did while the person was trading. On this trade, I bought, it was a buy on GBP USD, and I used 0.01. And this is the time I opened, this is the price I opened at, this is the price I closed out. Like that, everything is just so vivid right there. Okay, you get to show the commission, swap, the profits, everything right there. I hope that makes sense. So on the settings, this way you can also change your settings. So by default, sometimes you might not like these colors, you want to change your chart settings. Just click on the settings at this bottom, and you also click on this last settings too. And then you want to go on, and this is the sound. Whenever you play straight, you get to make sound. You want to off it, you can go ahead and off it. But me, I love that sound, so I'll leave it on. So if you want to change your chart settings, you click on chart, and you want to change, there's a part you see colors. So this is where you get to change your foreground color, your grid color, so you can just take a screenshot of what I have right now, and then you also have exact same settings that I have on my chart here too. All right. So without going too far, let me explain on the user interface. So this first point here is where you get to change this one that shows M1 or M15 as your landing point, anyone. Where you get to change time frame. In trading, we have different time frame. If you select M1 time frame, whereas 1 minute time frame, simply means every candle takes 1 minute to open and to close to form. If you select H1, it simply means all candles represent 1 hour candlestick action behavior. They took an hour to open and to close. If you select D1, that means daily. If you select weekly, W means weekly. If you select MN, monthly, it simply means any of these candles you see right now took 1 whole month to open and to close. So that brings us to different types of trader. We have different types of trader. We have a scalper, day trader, swing trader, and position trader. So a scalper is someone who gets into a trade hoping to just catch 5 to 10 pips. He's just scalping, getting in and getting out, getting in and getting out. While a day trader is someone who gets into a trade hoping to just make profits within that day. He is not looking to take the trade over till the next day. He must make profits or make his or her losses, or account for his or her losses or profits for that trading session, or that New York session, London session, Sydney session, or Tokyo session. That's a day trader. But swing traders don't mind keeping their trade over for weeks. They can keep it for a couple of days or some weeks. Those are type of swing traders. So those guys, they get to target around, say, 500 pips, 1,000 pips, 200 pips, as the case may be. And then we have position trader. Position trader get to check about 6 months interval, 3 months interval. These guys, I will call them investors with their vibes. So these are the types of traders. So that's why this time frame really does matter. So depends now, which time frame should you use depend on the type of trader that you want to be. I am a day trader, so that's why I use 4 hours. I use H4 for my main trend. I use 1 hour for my current trend, and I place my trade on M15. So you'll be seeing most of my trade being placed on M15. I stay most times on M15. So that's the reason, because I'm a day trader. This will then take me to the next topic, which is going to be order types. There are different types of orders in the financial market. You just see right now, this trade that we're in on, it just shot up. We are currently in profit. If we had held our trade, rather, would have been in profit right now. So that's how trading works. So market still keeps going up. Although we closed out in loss, but we're not able to hold enough. See now, it still keeps surging up, far up in profit. So now let's talk about other types, how to get into markets. I click on trade, I want to trade again. Now this time around, I want to buy again. I'll click on this plus sign at the top right corner, and then there are different types of order. I can decide to get into markets right now. That's what we call instant or market execution. On Android or iPhone, they have a different way of calling it. On Android, it is called instant execution. On iPhone, it's called market execution. So on this market execution line, I can tap on it, more options drops out. We have buy limit, we have sell limit, we have buy stop, we have sell stop. 2 of them are just simply the same thing. I mean, they are different stuff. Let me explain what it simply really means. First, limit orders. Then limit orders, we have buy limit and sell limit, sell stop and buy stop. Buy limit is simply when right now the market price is currently 1.27412. And then I decide that, okay, I'm not going to buy right now, though I know the market is going to go up. But I want price to come back to this point where it started gapping up. then all I just have to do is to make sure I set an order and say, okay, broker, don't worry, I might not be on my phone. Whenever market come back here, let it trigger me and start buying. So I'm going to go ahead and click on buy limit on my phone, and I'm going to specify the entry price to be 1.2627051. It's going to be my price. It's going to be 1.27051, and then I'll put my stop loss. So stop loss, since I'll be buying, my stop loss will have to be at the bottom. So my stop would be here. Maybe I'll say my stop should be 1.26 here, 1.26557. I'll come here and put it 1.26557, and now my take profit. That is when you go up, that's when you get to make profit. In trading, if you are buying, if it goes up, you get to make profit. If you are buying, if it goes down, you get to make loss. It's about predicting. So in order for me to do that perfect prediction stuff, I have to bring in this my prediction too. So long. So this is my entry. This is going to be my entry point. This thing that you see on, you must have seen this thing on trading on Instagram or on Facebook a lot. Traders posting this. This is how they're able to get it. So right here. So if it triggers me here, if it gets to this threshold and triggers me, I will be in a trade. But if it gets close to that point, but it didn't get to trigger me, I will not be in the trade. Whether your phone is off, you're not with your phone, this will happen regardless, because you already set it. It's what we call pending orders. Because you might not be on your phone at this time. They're telling your broker, anytime price gets here, I believe that price should go up. So put me in a trade. Let my stop loss be here. Let my take profit be here. So the opposite of this is sell limit. So in this type of market condition, now let's reverse this whole condition. This type of market condition, sell limit is when I will just do the opposite. Now market is currently at the top, right? Sell limit simply means placing price above the current market price. All right. So I would rather want to have something like this. I'll bring out my short. I'm expecting that price should get here. Immediately price get here, it should trigger me for a sell and start dropping. You see, and then I'll put my take profit somewhere around here, and I'll put my stop loss somewhere around. This is just random stop loss. I'm not teaching stop loss yet, but it is usually placed above the current market price. So if price gets here now, it's going to trigger me and then start dropping and start making money. But if it triggers me, I keep going up, I keep making losses. So that is sell limits. Now, another one again is stop orders. Stop order is the condition of the market where you set price above the current market price. Let market get there or above or below the market price. If you get there, triggers you and keep going in your direction. So buy stop would be that I set price above the current price. So maybe I don't want to buy now. I feel okay. Only when this level gets broken, then I feel market will still keep going up, just for some reason, because you can have different type of analysis. So I'm not going to get in for a buy, and I want market to get here and trigger me for a buy and take me up for a buy. So I'll put my take profit here, my stop loss again beneath because I'm buying. Then sell is just opposite of that. Sell limit is I'm going to be putting, I'm not going to sell here. I want price to get here, price to melt. When it gets here, it should trigger me on a sell and just keep going down. Then I get to make profit when it keeps going down. I'll put my take profit here, and then I'll put my stop loss somewhere around here again. But I will not be in the trade, not until market comes down to trigger this my entry threshold. That's when I'll be in the trade. But if market keep going up, I'm not affected until it comes down. Let's say, for example, it comes down, picks me up and start going up. That's when I start making losses. Or if it picks me now and start going down and I sell, I start making profit. So these are the two different conditions. So once I'm done with placing my buy limit, all I just need to do on my phone is just to click on place. If I click on place, the trade doesn't get triggered immediately. It will be queued on a placed order. It's reserved. So I will not be in the trade. This same apply. I will not be in the trade until price come back to this buy limit threshold. Can you see? This is a buy limit of 0.01 at this point. So if price come back here now and start going up, I'll be making profit. This is my stop loss, and my take profit is at the far top. That's how limit orders to work. I hope you enjoy this class. If you do enjoy this class, please kindly leave a thumbs up so that this can be recommended to as many other people who will be interested in learning Forex at the same time. I remember I said I was going to explain what leverage is and what margin really is, how it really happens at the back end. These are things that you are not going to see it whilst trading, but this is what happened at the back end with the brokers. So leverage, think of it this way. Say for example, the current price of GBP USD right now is 1.27535, right? So you want to place one lot size, and then you have $1,000 account. So your balance, right? Your account balance is $1,000. That's what you funded, right? Just as we funded $1,000. In order for you to place 1.0, you need 100,000 units of the base currency. Remember, we are trading GBP USD. So the base currency in this case is GBP. So you need 100,000 pounds to be able to place 1.0 lot size. We're putting everything that we have learned into practice right now. All right. So this time, remember that it's not going to be 100,000 exactly. It's going to be 100,000 multiplied by this current market price. So apparently, you're going to be needing 127,468 pound. 68 pound. Okay, so you're able to place 1.0. So how are you going to see all this money just be making $10 on each pip movement? That's crazy, right? So that's where the broker comes in. So the broker is saying, don't worry, we are going to give you 99% of this money. You just bring in 1%. Isn't that nice? So the 99 they bring is what we call leverage sum. And then the 1% you bring is what we call margin. So you guys notice that I showed you before on phone, just what margin is. I told you how it's been derived. This 1% is margin is the 1% you drop in performing a transaction. Leverage, this is the 99% that the broker lends to you. So once you are done with this transaction, the broker pulls out immediately. They take their money back. Whether or not you make profits, it's none of their business. If you make profit, you keep it. If you make losses, keep it too. So they take their margin. They take their leverage back while they still leave you with your margin. So this is just basically how the leverage and the margin really works. So the next thing I want to be telling you about is Forex analysis. How do you do analysis and how do I get to make profit? Jeff, how am I able to predict that it's going to be a buy? How did you bought before? If you had waited now, you'd have made profit. How did you know that it was going to be a buy, not a sell? How did you know it's going to be a sell, not a buy? Things like that, right? There are types of analysis. There are 3 different types of Forex analysis. The first is sentimental analysis. Sentimental analysis type of analysis you get to find on social media like Twitter, now called X, and you get to find in an opinionated environment. Because Elon Musk was buying Shiba Inu, we saw many people hooked on Shiba Inu, and Shiba Inu was to the moon until it dipped straight right down. And then we also have so many other things that did happen in the crypto space at the time that crypto was booming. We also that everything came down. Even the almighty Bitcoin went to 64K. Right now, at the time of making this video, right now is 42K, which is a good market because it went even straight down to about 15K at some point. So sorry to those who bought at 64K, hoping to get to 100K and then they sell. Now they are in deep loss. So that's just how sentimental analysis works. Sentimental analysis is since people who have been proven to have results in the past are currently buying a particular thing, they are bullish on a particular thing, you think it's wise to just follow them, follow the big boys, and then you get to follow them. That's sentimental analysis. I, for one, don't think sentimental analysis should be left alone as a standalone type of analysis. I don't trust it. Because I'm rich and I'm doing something doesn't mean I can't be stupid sometimes. So I don't really trust that. So that takes me to the second type of analysis, which is what we call fundamental analysis. Fundamental analysis is the type of analysis that has to deal with the macro and microeconomic news events as to how it affects a country's currency, like political, social, economical, how this type of events get to affect a particular country's economy. Example, politically, we saw anytime that the United States is about to conduct an election, like the one of Joe Biden and Donald Trump, United States dollars was highly affected. Either it's going to be bullish more often, or it's going to be more erratic, or it's going to be bearish more often, depending on who wins. If the Republican wins, something different happens. If the Democrat wins, something also do happen. So this is what we call fundamental analysis. And there's a website where you can get to know which currency is being affected right now by the news events, what event is affecting it, what time is it going to be affecting, and how to go, whether it's going to be a bullish one or it's going to be a bearish one. And that website is what we call Forex Factory. We have a couple. I'm going to be giving you so many. We have forexfactory.com. We also do have investing.com. We have investing.com. And we also have my FX book.com. Basically, this website gets to show you the upcoming calendars and tell you what is going to be affecting, what's going to be affected. So when you get to this Forex Factory, the first display that they show you is the Forex calendar. All right, if it doesn't show the first one, just click on calendar right here. It's as simple as clicking on this calendar. Boom, you're good. And if you get to investing.com, all you need to do, you don't need to even sign up. Just go to the calendar point again. Just come to the technicals, you come on there's supposed to be, oh, I'm used to viewing it from phone, but if it's here, I think I just saw it, but then, okay, no, I saw economy instead. Yeah, on investing.com, all you have to do is just come to tools and you click on economic calendar. It's going to take you there too. So you're going to be having it this way. Don't worry, it looks scattered right now. It looks like this is some complex balance book, check, economics kind of thing. Don't worry, they are very simple things to understand. Then my FX book is another one again. Same thing, you just have to come to home and you click on economic calendar. You get to also have the calendar right there in front of you. Almost everything represents the same thing, but the one I do use and recommend is Forex Factory. It's very simple, straight to the point, and not complex. So in fact, as a matter of fact, the first thing that they offer here is the calendar, forexfactory.com. So the first column you're going to see represents the date. So today is Friday, January 5th. And then the time, it shows you all the times or when this news is going to be happening. And it shows you the currency that's going to be affected, and also show the type of impact. Generally on impact, if it is white, it simply means the currency that is specified that day is going to be a bank holiday for that currency. That is a bank holiday. They're not going to be opening banks in that country that day. If it is yellow like this, it just means it's low impact. It doesn't really have so much effect. If it is orange like this, it means it's medium impact that is expected of this news. If it is red, high impact. You should be wary, be careful. Like today is the first Friday of the month, and that's when we get to have what we call non-farm payroll. So this is the non-farm payroll here. If you know about non-farm payroll, you know that everybody is scared of non-farm payroll as a fundamental, or everybody do care about fundamental regarding non-farm payroll. This is where unemployment rates get to be declared in the United States. So that gets to tell you that that's a lot of effect. So whether most people are unemployed in the United States or they are more employed, so that can give you a positive impact. That can give USD rather a positive impact or a negative impact. So this day today, you see, it was bullish. That's why it is represented in green. So USD is expected to be bullish. So that's why you notice that immediately on the chart, when this news was released, this was first when it was released, what happened? The price market went straight down. Now it started going up. That's because the news has already gone. News always happens. It happens tentatively. It can happen just once push and then start going down gradually. And it can also have a long-term lasting effect in the market. So now if you click on this folder, it gets to give you more information as to why this news happened, when does it happen, when is the next one, when are we anticipating the next one, or what happened in the previous ones. So the last one that did happen was December 8th. Remember I told you it happens every first Friday of each month. So November 3rd, first Friday of November, October 6th, first Friday of October, like that. It just keep happening every first Friday of each new month. Now this is the measures. The change in the number of employed people during the previous month, excluding the farming industry. So they don't calculate the farming industry. They're talking about every other people, unemployed people or employed people, excluding the farming industry. That's what it's called non-farm payroll, NFP. All right. So the next release date is going to be February 2nd, 2024. So if you're expecting that, so you now understand how this definitely works. Now you can read history about it, read more information about it. So I think that is where you get this info. Then the next thing is this website gets to tell you the forecast. Forecast is done by macroeconomists, people who are experts in this time, because they will have used the previous data to be able to determine, okay, next one I think is going to be bullish. Next one I think it's going to favor the dollar, or this is how people are going to react. Or people are not going to like the next employment change that will happen. So they get to predict based on their expertise. They also tell you what happened in the previous one. This is for previous. This is the forecast by economists. And then this is the graph to show you what has always been happening. So now, this actual is what really happened in the time and the day that this was actually released. So next one is about to happen now. This is going to, the last news to happen the day today. You see, there's a small tiny green arrow shows that this is the next news. This is going to be happening by 7:30 p.m. today. And right now, the time now is 4:20. So by 7:30 p.m. today, on USD, it's going to be medium impact. It's going to be FOMC member backing speaks. So this member backing is going to be speaking. So it's going to be low, medium impact. So you notice that there is no actual forecast right here because they don't also know what's going to happen. And there's no forecast because it's just somebody speaking. If we are checked back in time, it would notice that all of this actually wouldn't have been there. Let me check tomorrow. The news will be happening tomorrow so I can explain. Okay, tomorrow is Saturday, so it's Friday, no news, no market is not open. So on Monday. So what I just wanted to explain to you is that forecast is always there, previous is always there. But then you notice what is not there is actual. So this actual only gets to be displayed when the news has already happened about a couple of minutes. All right, so let's go back to today. So you would have already guessed that today, this actual line was actually empty. So you only get filled in once the news gets released. So this is how you can use this into trade. Now let me show you how exactly you can take advantage of it. For example, we are trading this NFP. Since we noticed that it was green for dollar USD, is that it's saying that if it's green for USD, it simply means USD is going to be strong. All we just need to do is to go to all GBP, all USD crosses, like I'll just go to GBP USD. If I go on GBP USD, what will I do? GBP USD. I'll go on GBP USD and I'll click on sell GBP USD. Why? If you click on sell GBP USD, that simply means you are saying GBP, the base currency, is going to be weak. All right. And the quote currency is going to be strong, which in this case, GBP USD was actually strong because it was green. So we'll go on USD JPY, and we'll go on and we'll do buy. Why? Because USD is the base here. So apparently, just a simple, short, long story is whatever you are doing affects directly the base currency. Please, can you know that there are more to this? Personally, when I was starting out, I discovered that there's a website that you can actually subscribe to. You get to know the news release beforehand before the news actually gets released. So it's kind of deeper than this, but this is just a surface, a beginner's guide to how you can be a fundamental trader. The next type of trader is technical analysis. Technical analysts believe that whatever price has done in time past, that it will always repeat it somehow, sometime, anytime price gets back to that same level. That's what they just believe. If you tell them what's going to happen tomorrow, then the next thing that fundamental analyst is going to ask you, what happened yesterday? So they want to use yesterday to predict what will likely happen today and tomorrow. That's what they just believe. That's why you see most people are technical trader. Even yours truly, Jeffrey Benson, I'm a technicalist, so I'm a technical trader. So I believe that anytime that price gets to a certain zone about 2 or 3 times, price getting there again, there definitely will be a reaction. That's just behavior there. So if you want to learn how to become a pure technicalist and become a very good trader and be able to predict price movement from one point to another, I would recommend that you be a part of our mentorship. So this mentorship, go on to firepipfx.com, and then we have the join free class, and we also have the enroll now. Join free class just entail what I've taught you guys here and even a lot more deeper. But enroll now can actually take you to a mentorship from 0 to 100. So we have different mentorship plans. Different mentorship plan we have right now. We're currently on a promo at the time of making this video, right? So we are still off 50% on everything. So the monthly plan is for $9. The 3 months is like $9. The 6 months is $225, and then the 12 month, which is a year, is $339. I think you should hop on this right now while these still last, because I know this is like on a promo thing. So these are the things you get to enjoy listed beneath it, and you get to have my WhatsApp, stay in the same community, or get to do constant live classes from Monday to Sunday, except Saturday, where we give you some time off to rest. So now let's go to the technical analysis. So technical analysis includes use of tools like trend line, horizontal line, Fibonacci tools retracement. We also include indicators like RSI, MACD, divergence, which is MACD divergence, also including moving averages, etc. It just depends on how well you can predict the price movement in a couple of minutes. So some of the tools that we get to use in technical analysis are very simple. You can use indicators like here is where you can get the indicators. I've taught on how to use RSI. You can check on YouTube here where I get to teach you guys for free how my RSI strategy makes me around $10,000. All right, when I started out trading Forex, I've used RSI strategy, I've used MACD strategy, and I've taught all of this strategy for free here on YouTube. So if you like how that sounds, make sure you hit the subscribe button too, so that this YouTube you can get to be getting more content from me. So you just come on here and type RSI. So typing RSI simply means relative strength index. So if you type it out there, then it should appear at the bottom of your screen. I just click once, so you have to boot up. Okay, yeah, that's it, that right there at the bottom of your screen. So anytime price gets to this point, technical analysis will check what is the candlesticks really doing right now to predict, and then this purple line crosses with the yellow line. That simply means it's going to be a sell off of that point. So maybe that happened on this candle, you go in for a sell right there. So it helps you to predict what candles will likely do next. So ultimately, talking about technical analysis, the ultimate thing in technical analysis is studying how candlesticks behave. So under this, we also have candlesticks pattern, candlesticks behavior. We also have chart pattern. Talking about candlesticks pattern, I recently made 2 videos back. I talked about candlesticks pattern that you should learn. All right, so please kindly go ahead and visit those videos too. As a matter of fact, if you want to be a technicalist as a Forex trader, this is the right channel for you, because I'm a technical trader and that's what I talk about day in, day out. So I think I should show you guys some of these videos you should go watch on your own. So just head straight to my YouTube channel, and please kindly give me a subscribe and also a like on any of this video that you do like, and also drop a comment as what you think at any point in time. All right, here on my YouTube channel, you notice that I have tons of videos. I've dropped videos about 418, so that's enough content for you to watch. So just click on videos. I'm going to show you 3 content that you should get started right now as a fundamental trader right off this video. So you see, I talked about candlesticks. So if you want to really know how these candlesticks really work, please kindly start from this video. All right, and I've also talked about me trading with technical analysis here, technical analysis there. And please also watch one of my most popular video where I get to talk about how I use my RSI strategy to make consistent profit. Like here's the Forex strategy for beginners. So this was talking about RSI, relative strength index, and you have to watch this one too. How I make $54,000 in 4 hours. This is also everything that you see right here is what I do with technical analysis. So let me just teach you 2 concepts here on this technical analysis, and I'll let you be for today. So 2 major concepts: understanding how candlesticks really works. All of these candlesticks tells you a story. That's the number 1 thing. Candlesticks tells you a story, what is currently happening in the price, or what has happened whilst we were away. So for example, we were not here when this whole movement had happened. Let's say for example, we weren't here when this had happened. Oh, this is not my premium account. Okay, my premium account is on here. We're not here when this movement had happened. How would we have known that price actually came down here before it started moving up? Here's how it means. Let me use this candle to explain. So sell candle is represented with the red right now, and the green candle is represented with a bullish candle. This green candle means it's a buy candle, and then this red is a bearish candle. The color does not really matter, because girls these days even change their colors to pink and purple. So even me, sometimes I get to change my color. Some people have theirs as red and blue. But how do you definitely know that this is a buy candle and this is a sell candle? It's not in the coloring. It's in their opening to their closing. So a sell candle ordinarily would open from the top, opens at the top and closes below. I have to know a candle. This is open and this is the close. And then at some point, let me give another instance. Let's say at some point, this candle had gone somewhere around, let me clear this one. This is a buy candle. Why a buy candle opens below, goes up, close at the top, as a buy candle. So this is the open, and then this is the close. So what determines a candle, whether it's a bullish candle or a bearish candle? Bullish candles opens below and closes top. A bearish candle opens at the top and closes below. That's what determines them. All right, good. So at the point of this candle opening, then it first went straight to this point before coming down. While coming down, it's going to leave it in form of wick. So maybe as before it opened, it came down and moved up again. While going up, it's going to leave a wick at that point. So in order for me to better explain this whole concept to you, let's go on the 1 minute chart where things happen really very fast. I'm going to change this 15 minutes chart. I'm going to change it to 1 minute. All right. I want to use one live candle to represent something real quick. So let me change it to 1 minute chart. And you get to see what I'm saying. So you see, this candle now was once this tall, was once this long, all right? Was once this long as a bullish candle. But sellers push it down here. The only way I can tell you that I was this long is by leaving a wick. Now you see, it's a sell candle. Can you see? It became a sell candle. Before it was blue, but now it's now red. So if for any reason it pushes up from here a bit, see, it's going to leave a wick that I was once this long, but now they pushed me back. The buyers came and they pushed me. Now it's currently it closed. 1 minute got completed. It was 1 minute time. This one closed as a bullish. Something that was one bearish, closed bullish, and then a new one popped out. So a new one pop out right there. This is the opening price. So immediately you open, just start pushing down. That shows that they are strong seller right now on this 1 minute chart. So if it pushes up, it's going to leave a wick. Just to tell you that I was once this long, but now buyers pushed me up. So yes, you see, it just pushed up now. Telling you that I was once this long to this extent, but buyers pushed me up. So in about 30 seconds from now, this candle is going to close too. So let me just tell you some more other things so that we can watch these candles behave, so you can understand how candles do really work. I'm obsessed with candles. You also have to be obsessed too while starting out, because price action is key. In as much as you have these indicators, you have other things that you might learn as long as time goes on, even some other things that you will still Google or you will YouTube. Trust me, price action, understanding how candlesticks work is king. So right now, you see the candle just closed out right there. Immediately, so it's closed as a bearish one, a new one open. So this one, you can call it a sell candle because the opening price is higher than the closing price. And then this is the lowest. Where the wick ever got long, where the wick ever got to is the lowest price. So if price has gone up, if it had gone up before, then we would have said that was the highest it has ever gone to. The second thing I want to teach you here that important is what we call levels. Candlesticks, understanding how candlesticks work and levels are the key components of technical analysis. So there's what you call support and resistance, and there's something that we also do call demand zone and supply zone, and they're also called floors and ceiling. Everything means practically the same thing. So anytime price gets to a certain point, remember I told you technical analysts believe that if price has got to a certain point before, they feel that if price ever gets there again, there will be a reaction. Take for example, we have somewhere something like this, right? Rectangle. Price got here, make an hesitation. So price also go here, making an hesitation. So let me make it a little bit bigger to downside. Price got here, see price, maybe price got here, it dropped. Another time price got here again, what happened? There's a drop. Price got here, it tried to break above, but then it dropped. Came back again to this zone through here, it dropped. Now price is testing at this level. What is it telling you? There may likely be a what? A drop. That's how technicalists think. So once price is already here, the next thing you're going to look out for is the next price action, how the candles are going to behave. There are different types of candles telling you whether to sell at a point or to buy. So all you just have to do is just to Google candlesticks. Candlestick pattern. There is a bearish candlestick pattern, there's a bullish candlestick pattern. That is, there are candlestick patterns that tell you to buy, and there are candlestick patterns that also tell you to sell. That is that video which I showed you guys right here that I made for you. This one, 3 ultimate candlestick pattern. I destroyed everything regarding candlestick, all these things that you look complex. I destroyed it in three simple format, in 3 simple points. So you need to go watch that video. So let me just take one as an example. So in that circle right now, if you dare see a bearish or an evening star, that means that you should sell right there. So these things that you're seeing here, all this means is for bulls. If you see it at the bottom, it means you should buy. So the reverse of these things are for sale. Okay, now sorry, morning star means you should buy. If you see an evening star, it means you should sell. So if we see an evening star right in this box, right, it means we are going to sell on this, but we're going to click on a sell and then we'll get to make profit. So trading view basically is where you do your analysis, and technical analysis comprises of candlesticks and comprises of levels, which is what I've taught you so far today. I've been able to understand what forex trading is. Now the goal of this class is to make sure that you are exposed to forex trading, that this information, that how people are cashing out and living the best and the luxury lifestyle, is not fraudulent. It is open to you if you are really open well enough to learn. And learning is something that you alone have to really do. That's why you have to make sure you're taking the right decisions at the right time. So I would really advise you get into an academy that you really want to learn. You get to somebody that you best resonate with his or her personality, get to learn this skill, and then you get to build on that. The best way actually to learn forex trading is practicing. Apart from getting an academy, you still would need to practice. Just like the Bible, you read the Bible, reading is not just enough, you have to actually practice it. So if you don't practice it, it's not even, you are not different from someone who doesn't even know the Bible exists. So same thing is true with trading. Once you're learning how to trade, make sure you practice it. If you're also learning in our academy, we have put tools in place to make sure that you learn how to practice day in, day out. So with this one, I'm guaranteed and it is sure that you'll be able to get the result that you want. Some of you actually want a very better life. You don't really want so much flashy life, but you just want to be able to really eat, affect people around you, and just get that for your mother, your father, people just around you. While some of you just really like the flashy things of life, right? Or you just want to trade and be able to jack back to another country, go to a better country that is best for you. Whatever case you fall into is actually very fine. Trust me, trading flipped my life. I'm sure it can also do the same thing for you. Trust me, I'm not saying that you're going to get this thing in 1 month or in a couple of weeks. No, it's going to take time. Be ready. The same way you're able to consume this course from the beginning to the end. So I'm sure if you're able to consume all of that of my courses, my videos that I'm putting out every now and even join our mentorship where we are committed to teaching you day in, day out with different tutors, with different knowledge, bringing in different tactics. Trust me, you'll be able to make a killing. So please, guys, make sure you are involved in this thing this time around. Be serious. As you will be serious with this video, make sure you get serious and get things really done right now. Check the links in my description box. If there is anything that interests you around you want to get, go ahead and get that right now. All right, I'm going to see you guys in the next one, and bye. Make sure you are subscribed to this channel. Bye for now.